Hello traders, my name is Adam Harris, and let's just start off with the weekly economic events that I'm going to be keeping an eye on. This is for the week commencing Monday, the 11th of July 2022, and just kicking off with the major ones I want to keep my eye on. First of all, obviously, yes, there are continued fears of inflation, and so the main clues are what I'm going to be looking for, obviously, is global inflation. It's not just about the US, it is not just the only planets on the country. It's really just looking to see if there are any illusions, especially when we're talking about interest rate decisions from other countries. So certainly I'll be paying attention to what comes out of Canada, just as they're a neighbor. And also, are we seeing any kind of is the curve kind of flattening with regards to the rate of interest rate hikes, as well as that speeding up or slowing down? Is there a sense of panic in any of the speakers? But also just keeping an eye out of the US, kind of looking at core inflation rate as well. And really just wanting to see if there's any alarm bells going off there. Other than that, I expect it to be a relatively normal week in terms of activity with regards to economic calendar events. Let's move across and have a look at the charts. All right, so let's kick off starting with the US dollar index. So first of all, it, interestingly enough, has battled now with sort of 3 successive days with that 107 level. On the weekly, I would say that it isn't necessarily that overextended, and on the monthly, of course, it is. So I think for me, the question is going to be, will we have a bit of a retracement? It feels as though there's no real divergence here, no bearish divergence here. It feels as though if we did have a correction down here, it would simply just be a retracement with the ultimate intention of resuming the trend and continuing to the upside. So my expectation this week is still to maintain that strong dollar at this time. I mean, we'd have to have a double top or a lower high to see an actual longer term shift in this direction. For now, it appears as though we might just be in for shorter term relief on that strong US dollar, but not necessarily medium or longer term relief on that. Moving across, having a look at the euro against the US dollar, you can see we've a bit overextended. I do want to draw your attention to how close we are to that parity level. We are really not that far. We came within 71 pips of it during the week, and certainly I'd be surprised if the dollar did not, or the euro did not want to test that level just out of curiosity, if for no other reason. So this week I'll be looking again for possibly some shorter term relief to the upside, not necessarily expecting any trend changes at this time, although there has or was a bit of bullish divergence, here in the past. I'm not really seeing much of that here. However, it could be that we could touch parity this week and then have a stronger reaction against that. And if we got a lower high, a lower high and a lower low, and then we have the strong reaction, then there could be some bullish divergence, which would then indicate a stronger correction to the upside. So we'll have to see how that goes. I'm prepared for that as part of the trading plan. Let's see how it plays out. Then, where it gets interesting is looking here at sterling. Sterling is much more reluctant to break outside of its range. Doesn't mean that it would be able to survive it if the dollar was really strong, but it certainly is trying to stay above this 1.2 level. All right, so there's definitely a lot of fighting going on there. We've got the early stages here of a high-low, potential high on that 4-hourly. So there are attempts to do it. So for me, it's going to be interesting to see if sterling will manage to break up. Remember, last week I put in this trend line here just to give a sense of sort of bearish direction, and I would say that certainly if we did result in a higher break of these highs, breaking through that trend line, then my expectation becomes that we're going to start to see cable heading up towards 1.26, for example. Looking at the Australian dollar against the US dollar, same thing again here. It's also very reluctant to break below that or stay below that 0.68 level. A lot more bullishness, a lot more green candles coming in that weekly as well, starting to put in a couple of double wicks there. So all of these are the possible seeds of a sort of medium-term correction to the upside. Not showing it on the euro dollar yet, but it is appearing on the other pairs as well. Even here looking at the Kiwi, which has, let's be fair, has broken through its level of support. There's a break of structure here. This is an indecision candle. I'd be curious to see if this week we tap down and then have a rejection. That 4-hourly chart does look a lot more bullish here. It's really trying to create a bit of a base and a bullish engulfing candle here. It is trying to change the direction here, but we'll have to see how that goes. It has fallen through its major structure, so I want to see a bit more evidence of that starting to show itself. Then dollar yen. So dollar yen, certainly on the weekly, showing some exhaustion, some nice little depletion coming in. We've got these sort of wicks, higher wicks with sort of small indecision / spinning top bodies here. So correction to the downside makes a lot of sense. We're heavily overextended as well. At the same time, this behavior here is very similar to a bullish breakout pattern. We have that bearish divergence. We definitely have that. And I'm curious to see how that's ultimately going to play out. I do think we're due for a correction, but I'm also prepared for the idea that we have a bit of a breakout breakout here. However, at the same time, it could just ultimately be a failed breakout. This exhaustion here, we've seen this over the last year with lots of markets. There's quite a bit of exhaustion that we've seen in markets that ultimately they capitulated and did have a bit of a correction here. Even here, for example, dollar Swissy, you can see very strong rejections on that on those monthly charts as well. All of these are not signs of strength. It's continuing to push a little bit higher, but it feels more as though that is the dollar helping it than it is actually about the Swissy itself. And so we've got a slightly lower low here. We've pulled back into the moving averages. Yes, we're on this side of the 200 moving average, and it could just be taking another run at the highs, but I'm not sensing a lot of strength there. It feels as though it's just kind of going through the motions. Looking here at dollar CAD, here we've got a series of high lows right into a flat level of resistance. Let me just put in a level over there. So this for me is relatively significant. Let's put that in there at 1.3050, call it. And this is just struggling to get past that level, and it's actually had that for a while. So dollar CAD really not wanting to go much higher. It feels as though it's being pushed from behind, and that's possibly that dollar again as well doing that. So interesting to me. I'm seeing, just compared to say last week, I'm seeing mixed results across the different pairs here, which kind of means that maybe the dollar is not really a factor at this point in time. It might be this week, but it does feel as though the dollar has kind of taken a bit of a breather. The euro is doing its thing. Sterling is doing its thing. You know, you've got dollar yen, dollar Swiss and dollar CAD all doing their own things. So that's interesting. That means that this week, be best to probably play it as it lies. Okay, so looking here, for example, dollar ruble, we've a bit of a gap up there. Just interesting to see how its behavior is. So indicate, obviously there's plenty of instability here, but just interesting to see that it is still roughly in this area. So I'm just going to keep an eye on that as the war plays out. I want to see where it is by the time the war ends. Hopefully it ends soon, and for the right reasons. So, right, let's move on and have a look at EURUSD. These are currency pairs of interest. So I'm going to start to include EURUSD on my watch list in the same way I've done dollar ruble, just to note that we are slowly but surely eking a little bit low. We've definitely got some bullish divergence coming in here on these indicators. We're starting to produce higher lows, and on price, we've still got some lower lows. We've got that bullish engulfing candle on the daily. All of those showing buyers are coming in. They want to push back a little bit on that, and you can see here on that 4 hourly, that nice little bit of 4 hour support and the bullish move to the upside. So there's an effort early part of this week, I think, to see if it can get a little bit higher. A lot of weakness at this level at 1.03, let's call it 0350. Couldn't get past that, but also not really finding much interest below this, and that's parity as well. So we also got parity level here. I can just quickly shift the color of that so that that's easy for us to remember. Right, so just something to keep an eye on, and so there's a bit of pushback on that. So interesting to see how that's going to behave. Euro-Aussie as well. So Euro-Aussie, I've been waiting for a while for all this to break up to the upside. Now we've got this very strong, let's call that a bearish momentum candle. Okay, so it's signifying, especially when you look at it from a monthly perspective, that that was just a break and a retest of that downside where it had strong support, now becoming resistance, and therefore looks like it wants some continuation to the downside. So that's interesting to me. There might very well be some good trading opportunities to the downside on Euro-Aussie. I've been wanting to trade it to the upside, but it appears as though it is now intent on moving to, or heading lower. So great. Then moving on to metals, precious metals. Let's have a look at gold. Gold continues to slide below these major levels. It's now sort of below 1750. Next major level that I have is either going to be 1700 or around here 1680. And so I do expect it might as well continue to do it. A little bit of a couple of these I often refer to as pause and goes. These are just these small indecision candles before we get another leg down. At the same time, they could indicate a bit of a pullback in to test this level for resistance before continuing to the downside. We do have some bullish divergence there. We've still got a higher low on the MACD, even though we have a lower low on price. But overall, the price here is more bearish than bullish. And so I'd be surprised if it worked its way to the upside. I'm expecting it to continue to the downside. Silver as well, same thing. Slowing down a little bit here for no other reason to come back possibly and test that 20.40 level and then continue to the downside. It's broken through its major levels as well. It's free at this point to head down towards 1850. I can just, I guess, create another one down there and just bring this level there. So that makes the most sense, that is where it would likely want to continue down. Price action here is starting to put the brakes on as it approaches this level, but and so if it makes sense to me, it might just want to continue a little bit more. Interesting. So the dollar doesn't seem to be, it has been a factor, it doesn't seem to be as much of a factor as we kind of work our way through these. Copper as well, for example, you can see copper having a bit of a reaction finally at this level here. So let's just put in one there, just so I can mark it. There we go. And possibly it's going to try to stay above that. Very overextended to the downside. Might actually want to try and push a little bit higher, but for the moment this trend does seem to be intact. What I'd like to see is possibly a second reaction against this level with an equally strong rejection of that level that would then indicate a change to the upside. Natural gas as well slowing down. You can see you've got that nice little bullish indecision candle here on the weekly and also potentially on the monthly as well. So both monthly and weekly bullish indecision candles overextended to the downside, possibly here. Again, that could be a pause and go before it carries on down. But here you can see with the double bottom on the daily, it looks like it's either going to try and tread water or try to push back up a little bit. All right, moving on to crude oils, for example. Right, very interesting. So just a nice, strong, solid pushback within the downtrend, by the way. Last week also forming possibility here. That is not really a strong bullish candle on the weekly, not really. I was looking for a continuation, so we've got a series of higher lows here, looking for price to generally try to stay above the previous lows and then work its way back up to take another run at that level, because it's tried several times and been rejected. On the monthly, we can see it's overextended, and it would benefit really well from a correction down towards $85 before then resuming its longer term uptrend. So we'll see. That's not a strong finish for me. I would not be surprised this week if this continued to take another move down and possibly finish below $100. Let's see how that goes. Let's look at Brent. Brent's the same thing, also trying to bounce off that 100. It's possible that there was just a knee-jerk reaction again against that psychology of a nice round number, and possibly you just get a really good pushback on that. The question is, can we see a continuation and start to break above these highs? So in other words, I would need to see it break. Let's call it above 115 this week to feel confident that it's going to maintain it. There's also a level of resistance. If I just stick in a level here, there's also a level of resistance there at 120. This price action here, it's still closed below the lows of the previous week. I'm expecting this to possibly drop a little bit lower. It's also overextended here, and this would definitely benefit from a move back down to $80. So crude oil giving some mixed signals there, but certainly I wouldn't be surprised at all to see it hit low. Sugar. Nice strong recovery. You see it's got a series of higher lows and a nice bullish monthly candle and a strong bullish engulfing candle that almost engulfed. It did, I think, the last three candles. So that's usually an indication that it's going to attempt to push up. And this one looks a lot better, I would say, than the one we saw in oil. This one indicates that it wouldn't be a surprise. You can see it's also struggling here with that 1950 level. Strong depletion at that level, just can't seem to get past it. So I expect an attempt to move higher, but not really go that much further. We'll see how that does. Coffee is similar. Look, again, it's trying. It's here. Strong failure at that level, then a pullback, then a strong recovery with a strong buys below this level. Then it fails here and closes lower. So this, again, for me, hints at further slips to the downside, just slowly eking lower. Wheat. Beautiful, came all the way down to the previous highs, touched this level, 800 level, bounced right back on it, and all it's really done is produce this sort of indecision candle with a nice rejection of the lows. The weekly candle looks really good, and so push higher kind of makes a little bit more sense, but it isn't as strong a rejection of those lows. So that's, commodities of the ones we've gone through so far, which are, oil, crude, gold, a few others. They had a nice little bit of a finish. All of that seems to be mostly as a result of the dollar just taking a bit of a breather on the tail end of the week. We don't know yet if this is the beginning of the dollar taking a longer breather, which of course it deserves to do. So that's why I'm not entirely convinced we won't see the dollar possibly pick up where it left off and start to push back a little bit on that. Just keeping that as part of the possibilities within my trade plan. All right, so cotton as well, this is a stronger sign for me. We've just moved down, we have another move, and we get even stronger bullish moves to the upside there. So for me, at the level that we're at, this makes way more sense that we would get a bit of a bounce here as well. We've also had a bit of an indecision bullish rejection candle the previous week and last week. Again, it's not a strong finish on its own, but as part of a sequence of behaviors, as part of a pattern of behaviors, it does look as though it is very keen to find some support at where it is. In fact, actually, if I mark it here and just go and grab the old highs, that's fantastic. So it's actually bouncing off the old highs. They're finding some strong support. This could indeed push high. Can it get back up above 100? We'll have to see how that goes, but keen to do that. Okay, so moving on to the MVPs, at least as far as most people I know feel, is let's have a look at the US indices and the global indices as well. So currently, just highlighting here that, again, we've had, if we go back historically, we look at this, we've pulled back roughly into a bit. I would actually prefer for it to tap that 50 moving average and these old highs. This would be a great area for it to find some support and carry on. But where we are now if we are going to recover from where we are, if this is it, if the market was just a little bit too hot, it's shed some weight, and now it's going to pick up where it left off, which if you think we've had about, let's call it from the high, 1, 2, 3, 4, we've had 7 candles down, and let's just say that we recover with about 7 to 10 candles to the upside. That would maintain a relatively decent angle. It's not so bad to get back up to these old highs. This is a possibility. So this is what I need to see the markets do this week. I want to see them follow through on that. I need to see a break above the high of last week. So you can see nice rejections here. Buyers coming back in, rejecting higher lows than we did. So we had a bit of a nice U-turn here. Then we came back, rejected another rejection, but a bit of a lower high. We didn't go much higher. So I want to see breaks of those previous highs. And so early start this week would be great to see if we can break 32,000 and push on. We've sort of got the basis here for a slightly of the beginning of an uptrend. It's early days to be calling it, but this is what I want to see. We've now also at the same time, if we do manage to do this and we finish the end of the month with a nice green candle, then I think there is an increasing probability and possibility that this is going to be the bottom, at least on the next leg up of the market. So that's what I need to see this week, is starting to see a break above these highs and close, by the way, ladies and gentlemen, to the upside. Should the US dollar again come back with a vengeance, let's take a bit of a breather, decides to get back in the game, then the market's going to finish. They're going to finish roughly where they are, or potentially even much lower. Now, overall, the numbers, excuse me, jobs numbers and a few of the other things coming out of the US appear to be relatively healthy, but we've got the rest of the world to take into account as well. And a lot of big institutions are convinced that there's going to be a recession in the Eurozone. And so it's very much doom and gloom. And the basis for the ideas is not false. There's definitely reasons for thinking that. The question is the market going to be able to, I guess, dust itself off and try to go back to work? So let's have a look and see. We're back into this area. You can see this blue zone. This is on the S&P. And it's a great area for it to find some support. I'd like to see if that's going to be the case. We had a nice move down, bullish reaction there. We haven't really followed through. What should have happened after this bullish candle is a move a little bit further, but that doesn't mean we won't. But there's a really nice clear area if we can just get, and I can see 4,000 up here. So if we can close above 4,000, that's a fantastic sign next week. But I can see right now the challenge is much closer to home, 3,922, let's call it, to see it get past that. I really need to close above those levels. Nice and bullish. It looks like there's no reason why it shouldn't be able to do it, but gotta see it to believe it. Okay, Nasdaq. Same thing again. Nasdaq's also back down close to its little blue zone here, almost touching the 50. Again, these are if it ultimately goes up from here, forget about, and I say temporarily, put the inflation and recession stuff away, because throughout the entire history of the markets that we have, most of the bigger moves have often been tied to either inflation or recession. They've always, whether they triggered it or whether they were the consequences of the correction, they've always been there. So they are seasonal. There's a good argument to make that recession or inflation, market corrections as a result of inflation and rate hikes, are seasonal. Okay, so the question is, have we hit Armageddon now, or are the markets continuing to do that? And by Armageddon, all I mean is that we have a lot of debt, and we've become very accustomed to using a credit card approach to keep spending as opposed to paying off the credit card. And are we going to find a way to do that? I believe that if anyone can do that, it's Joe Biden. As in, he's been around for a while. He's very old-fashioned. I think if anyone could revert back to it, if anyone had that experience, I think that it would be him. I know he has a lot of fans and he has a lot of non-fans, but the logic is relatively sound, that he's been around for a very long time and is old-fashioned at the same time. He's willing to do what it needs to get the economy back to where it was back in the 60s and 70s or so on. He's willing to do that, and so I trust that out of a lot of other prospective people, he's certainly not bad for the mix. We'll see. Also, I struggle with the idea that all these billionaire moguls who look after themselves and who've benefited from these kinds of perks feel that they can run the country better and they don't have the experience to do it. I struggle with that. I'm always open to being proved wrong. I always am, but let's see how it goes. So Right, so we've got some of these kind of moves. That's what I'm looking for. That looks good. I like the basis of that. I like to see. This is what I've been talking about. This is what I wanted to see. I need to see follow through here. We've got the setup here to test these levels and push higher. This is the Russell as well, starting to produce a series of these. Look, remember, what it hasn't done is really broken below these lows, so it could continue down from here. Those possibilities are clear, but what is new that we haven't had for a while is some really nice bullish green signs here. Right, let's move on to the FTSE. See, how did the FTSE do? FTSE, again, is, remember, historically is trying to stay above that 7,000 level. So far, some really nice wick rejections there. A nice little indecision week last week. So for me, there's signs here that the dollar abated a little bit. The markets, all of the markets across the board seem to have boosted a little bit. Is it a pause, or is it actually going to be, is it going to start to create a foundation? Have they recovered a bit? Have they got some renewed energy, and are they wishing to push a little bit high? Excuse me. Yeah, look at this, the DAX as well. Very cool to see a little bit of a double bottom here. So let's just mark that level. Really nice, strong bullish wick, which off rejection of that, and a close right at the top. I would have preferred a bigger green part component to it, but then in isolation is very nice and bullish, and you can see here as well, nice little green finish. Not really near any major levels other than possibly going back to 2019. Again, I want to see, it wouldn't take much to break the high of this. I want to see here, I want to see it back up above 13,500 to feel that we have a bit more of that. We're going to maybe see a bit of a recovery by the end of the year, and if we do, the markets will be they'll move, I think, quite quickly, but let's see how it goes. Then you have the Nikkei as well. You see all these rejections coming in here, reject, but it's slowly just the lows, or not the closes. Here's the open, there's a close, there's an open, there's a close, but it's slipping a little bit here. Need to see a stronger finish here. Okay, it's an indecision candle, which can always be a good turning point. The weekly is not showing much of a clue here, so this offers very little in the way of that. I'd need to see the market close much higher above that sort of 27,000 level. All right, so, and the Nikkei here showing a little bit of backbone, just kind of pushing a bit off those levels as well. So yeah, I could actually see that it starts to push a little bit higher. I mean, not a lot of clues in the daily action, but yeah. And finishing off with the Australian ASX. Yeah, this looks pretty good here for a correction back up towards 7,000. That would be interesting to me. Excuse me. We've broken through the lows here, but overall, it looks pretty good. I want to see if we can, again, break above, let's call it 6,800, and just close a little bit higher. And so, look, in the past, we haven't really seen these kinds of green shoots. The question is there going to be enough oomph for them to pick up pace and optimism that comes back into the market? It's possible. Yes, it's absolutely possible. We could see that happen. And then on to the equities of interest. So we've got Glencore. It's a nice correction back down into the moving averages on that monthly time frame, back into its sort of core area of momentum. So I quite like that. We've got there was solid bearish divergence here, which often means, if nothing else, we're going to get a retracement on the monthly. I was actually, based off this, I would have expected a deeper correction down towards 300. So I still think there's some room to correct to the downside, but it is in a good area. If it can recover from here, that's fine as well. It does imply there might be some resistance when we get back up to this level. Tesco. All right, so there again, really nice small bullish sign. Again, it doesn't have to come back and retest this area of resistance as support. It is, again, also in a really good area for it to take off from here. So all of that is very much a possibility this week. Certainly more bullishness than we've seen in a while. Okay, here, so Amex, nice little double bottom, solid bullish divergence on the indicators here. It's shed a lot of weight, looks good. I quite like this. We've had a couple of wick rejections here and a nice little bullish candle as well. So, there's a bit of, again, similar to what I did with Sterling, where I had that sort of trend line coming down just to keep that bearishness. Let me just sort of demonstrate it. But let's say that I took this and just kind of did that. If we start to break through that wall, that bearish wall, and start to break up above or head back up to these levels, it could be enough to start turning things around. So I quite like the look of this. Apple, nice little uptrend on the daily. Very, very nice, strong weekly finish there. That looks fantastic. Very bullish. That is not a sign of weakness. And monthly is a really nice retest of the previous highs. And almost currently a bullish inside candle, almost from bottom. Not a lot of wick on top and bottom. Those are all good signs. It's going to be some resistance when it gets back up here. Looks very, very good. In isolation, that to me looks like the basis for the next leg up. ARC Innovation. I mean, this is overdue for now. I don't want to crack a joke. I mean, I do own I do own parts of these, so I do have a slice of ARC, but this is now had a really good overextended move. Nice little double wick rejections here. Bullish candle, it's a swing low at the moment. It has to get through this level of resistance at 50, and then it's a free run up to 70. So let's see if we can manage to do it this week. So that looks good. I think it'll get a help. If all the markets will do it, that kind of weight will carry across. AT&T stays in this orange zone. It's still on that weekly. A little bit of resistance where it is now at 21, but I think likely to push through again if we see a boost from the market. That price is now hovering in this area as opposed to previous attempts where it's tried and been rejected. Even here, tried to push through, got rejected all the way down. It's managing to stay in that area now, so that's an improvement. Berkshire Hathaway right back down to this previous level, trying to produce or find some support there. So far, that level appears to be holding. We've got an uptrend on the daily. We've broken that high. Need to see a continuation. This is not actually looking as strong as I would have expected. But if everything else does that move up, we'll get that too. BP. So BP had a solid smack on the nose from this level. It's back down here, back into the moving averages. That is point of equilibrium of these old highs over here. So if I just go and put that in, and so it may actually manage to stay above this level. But again, it'll be supported or rejected by the move in equities. So they'll have to, in equities, in commodities. So we'll have to see if crudes also take a bit of a move to the upside. Exxon, also heavily overextended, managed to have a bit of a correction. I'm surprised that it didn't come back down to test these levels. There could be, again, I would think that if crude oils take a bit of continue to head lower, we'll see the same for these two guys. And we'll see that happen there as well. Coca-Cola, very nice. All of this, letting off, struggling to get above that 65 level, but also strong. Lots of buyers below here. You can see just buyers stepping in here, push it back, pushing it back, not much beyond that. It could, I think, this was a really nice sort of a break and a retest and a continuation. It can continue up from here, but it is struggling at the moment, and this is possibly why Berkshire Hathaway wasn't looking as strong as I would have expected. On the weekly, we've just got a bit of an inside bearish candle. Okay, so not showing as much strength as I would expect. What I do want to see then is a break and a close above that 65 level, which could come now. We'll see. But I'm just commenting there's some definite resistance there. Fascinating battle going on here with FedEx. Look at the smaller, just bigger green candles coming in, trying to push away from that level of support, pulling back a bullish buyer's candle, trying to continue up from there. So the base is here for a move to the upside. We will see. But it's been trying for a while now, actually going all the way back to April. It's been trying to get away from that level and pushing to the upside. General Motors. Okay, slow and steady down to these lows here. We've actually broken. I think it's fair if I go ahead and just put that in. So let's just go and mark that level over there. There we go. Is that where we are? Yep. So we're coming back into those all highs and testing those. We could find the basis here. I mean, it wouldn't take much of a move to the upside to get back up above these old highs, but General Motors has obviously been around for a while, so the moves do appear to be relatively small, but I would like to see that also happen this week. Nice bullish divergence here. Equal lows, almost a bit of a double bottom approach there, but it's got to push back up. And look, it may not go beyond 35, but a move and a close above these old highs in this coming week would be amazing. Otherwise, I would just like to see it creep a little bit higher. I do sometimes expect the market to do moves faster than they ultimately do. And then I'm, a week later, we haven't quite got to where I wanted to go, but it's fine. Let's see what happens. Again, we're sort of looking more and more bullish here. This behavior, a lot more bullish than we've seen sort of in previous moves over here. That weekly candle, I need to see you get back up above that 120 level. Okay, Meta's already produced an uptrend on that daily with a bit of a double bottom to boost. It's back down at these lows, a bit of a wick there. So it's okay. For me, the one I'm very intrigued is knowing what's in Meta's future. Are they just going to benefit from being associated with other technology products? I mean, I still find Google just as useful today as it was 10 years ago. I don't find the Facebook platform more useful now. I find it more difficult to work, and I'm not really sure where it goes and what the offers are for me as the kind of user. So it's possible they've morphed into something different, and there are users using that, and it just doesn't include me, and I'm on the outside. That's fine. We'll see how that goes. But always just taking Peter Lynch's advice about that. If you love a product, you could, why not buy yourself a slice of it? I just can't subscribe to that with Meta at this point in time. Morgan Stanley. All right, so it's shed quite a bit of weight. It's halfway between the 20 and 50, which is a valid turning point. Let's see it from a bigger perspective. How does that quarterly look? Okay, so the quarterly's put it back into the moving averages. It could have come back a little bit further, but this is all right. It's going to struggle when it gets back up to that 100 level again, no doubt. But it is in a valid place. For the monthly, I guess it'll do. From a fib retracement perspective, let's have a look at that from the lows up to highs. It's a 382. No, I think there was more room to the downside. I'm quite surprised that it hasn't actually, that hasn't gone further. So interesting, but it's got a high low in here, so it might benefit from the rest of the markets moving higher. Netflix. Okay, so this is very similar to me, I guess, for various reasons, similar to Meta, but it has given off or given back so much of its growth that it's kind of all the way back to 2017 now, and the speed at which it's done it. Look, a big chunk of that is not a reflection of Netflix. It's a reflection of the wider market moves. But I want to see if we can hold, and this looks very weak in comparison to some of the other markets. It's very bullish in terms of the MACD, looking like it's keen to change trend. It's closer to that zero line. Generally speaking, when the MACD goes above the zero line, it becomes bullish by definition. So I'd need to see a shift of that working its way back up. And again, all it needs is a nice strong, once it gets above that 250 level, more buyers are sitting here because then they get more confident and then they jump in. NVIDIA, that's fine. Good area for it to turn in. All the right signs on that weekly as well. Nice little bullish candle there. Daily looks good, but there's no bullish divergence here, by the way. Although it's got that, although it has all the other little characteristics we've seen, there's no bullish divergence on the indicators. Okay, PayPal has definitely slowed down. Look at the angle here on the weekly, straight down, and then it starts to slow almost immediately. This is in a really good place. Plus that bullish divergence you can see on the indicator starting to head high. This is a great place for this to push high and get back up above. And I think, again, once that gets above 100, that'll start to find other buyers. So the basis is there. Let's see if it can follow through. Again, what could happen is we could see a retracement on the monthly and then a continuation down. So in other words, the monthly does its big move down, does a correction for a couple of months, and then, continues down. And we only recover in 2023. Let's see how that goes. Oh, if this is on its way up, I'll be looking for signs of failure on the way up. Tesla, what are we on? Sorry, the Spider. Spider's great. Look at that. That's at a really nice double bottom, push to the upside. We're in an uptrend on the weekly, by the way. We've got a beautiful double bottom and a twin wick rejection here and a swing low. It's on its way back up to 92, possibly up to 100. Very happy, looks nice and strong, looks really aggressive. All of that looking fantastic. Straight above that zero line as well. All of that way more bullish than bearish. Spotify. Spotify is in exactly the same boat as Netflix, for example, and Meta. Okay, it's just got to get its way back from here, and this, to me, it makes sense. At least here you could see it trying to, you might call this an accumulation phase. It's just trying to find a bit of a base there, and obviously once it breaks here above these highs, it starts to become more to the upside. Let's see how Tesla's doing. So Tesla obviously stepped away from the Twitter deal, which I don't think it was a surprise to anyone. Obviously Musk has a reputation for doing this. The real interesting thing about it is it appears as though there's going to be some solid litigation that could be going on for years, where no doubt he's created a problem that didn't have to exist at all, where now, of course, Tesla owes Twitter money just for having created this whole bit of drama. So we'll see how it goes. Because it is interesting, he claims that the bots were part of the reason he wants to exit the thing. But actually, when he signed the original deal, there was a penalty clause saying that that wasn't necessarily a requirement, and so he's just trying to. It's just going to be an interesting little bit of a battle. But he's created problems for the shareholders. We'll see in it. I think we'll see how that all plays out in the end. Twitter also needs to find out what it's going to do, so it has its own types of issues it has to work out. Now, this is a bullish inside candle. This blue area is a good area for it to turn around in. It almost tapped the green area, which is also. These are all just different time frames where I'm looking for a correction on the monthly versus a correction on the yearly, for example. And this is a good area for it to turn around in. All right, I've also got a slice of Tesla, so I benefit either way. And in principle, I love the ideas. I'm just these days I just am a little bit concerned about Elon Musk at the helm because he does very odd things that he never used to do in the past. So we'll see how that goes. These are things I'm more curious about. I can't say with any real authority on some of those things. So they're just thoughts. Okay, so but that's a good area for a turnaround, and I can't see why that wouldn't push back up and keep going. Vanguard as well, all the way down. Really nice, healthy correction. Very, very nice and pretty on it. This one, if we go look at it on a quarterly, it's back into the moving averages, similar to what we saw, I think it was with JP Morgan or Morgan Stanley. Very cool. So good area for a turnaround. And so overall, just summing up as we go, that looks pretty good. Let's see what's going on with the 10-year T-notes. Look at that. So there was a strong rejection off the lows last month and immediately another continuation here. This level is held so far. This gives the indication this is the 10-year T-note. Looks as though that intends to carry on to the downside, continue pushing down. Eurobond as well. Obviously very overextended, strong wick. It has produced a swing high, but it's battling here on the weekly. So the weekly is the one to watch. If we break the high before breaking the low, we're going to see it work its way back up to 155. That's going to be the real challenge. There could be another rejection there and a continuation down. But it has produced right now in isolation, this is a potential continuation signal to the downside. So not really expecting much to change out of those two. When did I take the bubble from the list? Anyway, so we've got the US 10-year note, T-note, and we've got the Eurobond. So keep an eye on those. Okay, moving on to cryptos. So yeah, no doubt that if the equities get a boost this week, we'll see the same thing should carry across to cryptos. They've also started to produce similar to Netflix, similar to Spotify. They're all there. Make sense. They're all technology. They're all socially driven as well. Same thing. So it's a good area for it to do it. Old highs. This could be the basis of the next move to the upside. I'd be very cautious of anyone who's saying, oh, it's like guaranteed in another bull run. I think that that's a very dangerous approach. That's no different than someone talking about gold 100 years ago in the gold rush in California or something, saying, oh, yeah, it's absolutely guaranteed. That just is ridiculous talk, and you can't do that. But this could be the basis for the next move up. It's had a nice correction down to the 50-period moving average. I'd like to see it close up a little bit higher this week. I'd like to see it break through this 22,000 level and close a little bit higher. But the basis for the next leg up, we are starting to see what I think we could look back and see is going to be the case. Okay, I'm not really convinced just yet until we'll see it. I'll know it when I see it on the weekly chart for sure. But just highlighting it's the same with Ethereum. We're starting to see where it's pulled back to these old highs. Look at Cardano. So Cardano was, remember I spoke last week about this setting up for a continuation south. It didn't go anywhere. It actually stayed above that level. It is still producing this, but here's the subtle difference, very subtle, and it may not even mean anything, but that MACD is starting to trend up, whereas it was and it was flat. This could be trending up, which means it's starting to become more and more bullish. Actually, I would say this week the clues, if it's going to break high, would be that immediate move above these old highs over here. And obviously the MACD getting above zero again, starting to look that little bit more bullish, but the monthly in isolation is still bearish. So Cardano is not looking as great. It almost looks as though it's flatlining a bit. You can see the candles getting smaller and smaller and smaller, which is usually a consolidation before a big move. And I wonder if that move is going to happen this week. Could it just fall? Could there be something that we don't know? And if it hits lower or the rest hit higher, then there's possibly something that we need to be made aware of. Again, also Binance staying above this level where it is, struggling a little bit with breaking above that 235 level. But it's holding. And again, the formation there, the pattern there is very similar to a lot of stocks and technology stocks as well. Here we've got also the, so Solana as well. I need to see it break above these old highs here. But it's trying to trend higher. It's got higher lows coming in. And we've got these sort of bullish candles here close to the moving averages. Possible. So one thing I'm curious to see is what we see. Could it be that we start to see equities climb and we see cryptos drop lower? I would be surprised. It is a possibility, but I would expect them to get a boost with equities, or certainly with technology stocks anyway, if we get that with tech stocks, the association. So let's see how that plays out. But if they just don't, if they just fail to get that, in fact, if they start heading low, we could see a bit of a disconnect happening between cryptos, which is something that hasn't happened for a while. I'm open to that kind of thing happening. If it does, at least I need to be prepared for it. But I can't, at this time, there's nothing offhand that I can think of that doesn't indicate that the rest of the market gets a bit of a boost. We won't see that climb. All right, ladies and gents, I better wrap it up here. I apologize. The last few videos have been longer than normal. I need to get that back under control. I'll try and get back down to 30 minutes, but I hope you found this instructive and useful, and I look forward to hearing from you. Have a great week. Please trade carefully. Yes, we could see a slightly weaker dollar for a bit. It might come back with a vengeance, but also I want to keep an open mind that this might be a long overdue correction. Thank you.